Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name is Aaron Edwards with Santos Springs. Today is July 22nd, 2025, and we're going to talk about how corn and bean markets are failing at their resistance level. But before we get into the market analysis, let's start with recommendations. Let me share the screen and let's get into it. All right, get that pulled up. We always want the bias towards action. What needs to be done? So the first thing, check that box. Basis contract on 25% of quarter three corn. Use December unless local bids favor other contract. This should put us at 100% of basis locked in on quarter three corn. Second point, basis contract on 10% of new crop corn. Use December. This should put us at 100% of basis locked between sales and basis contracts. This should put us at 100% of our new crop, basically cash, locking in the making sure it has a place to go, so to speak. So we've locked in the cash side. And the third point is we're going to exit the hedge and sell cash soybeans on an additional 20% of quarter three volume, and that's on the soybean. So we did those hedges. Now we're coming down and we're going to, the futures have come down, the basis has popped. So we're going to unwind that, get out of the hedge, sell the cash, or if it was an HTA, lock in the basis. All right, we will come back to this screen later when it's time to summarize, but let's shift gears. Let's go talk a little bit about the crop conditions, and then we'll get into market analysis on soybeans and then on corn and go from there. So let me share the screen here. And let's get this pulled up here. Let's start with corn. Marker, let's get a color. Let's see what works. Blue would work great. So we're gonna use the blue marker. Move that up out of the way. So just to point out some things, actually I'll start with a highlighter here in yellow. This is USDA data. It's put out every Monday. These are the 18 states that account for 92% of the U.S.'s corn acreage. And what we want to do is we want to compare the previous year to basically these 18 states. So just comparing year over year. And we want to look at the good and the excellent ratings. So good and excellent this year as of yesterday's report, and good and excellent as of last year. So if we want to, now we'll go back to the blue, get that blue marker. So 56 plus 18,
74, right? If my math is right. And the 51 plus the 16, that's going to put us at 67 last year. Those sevens are a little wonky, but good to excellent rating on corn is quite a bit better than last year. I would be interested to see if you would agree. You know what state you're in. If you want to reach out and say, I think that numbers make sense, or I think that number's off, love to hear the feedback. Next thing is similar image on the soybeans. So grab the marker here, highlighter. We want to compare these numbers in yellow to these numbers in blue, basically. So 54 plus 14, that's 68. 56 plus 12, that is 68. Very similar, good to excellent ratings on soybeans. So quite a bit better at the report as of yesterday. Corn conditions are quite a bit better than last year. Bean conditions are the same. I'd be curious to know if you would agree with that. Now, the next segment, we're going to come into market analysis. If you follow along, our philosophy is a market plan portfolio that kind of makes sure we have the right strategies and volumes throughout the year. That's where we make sure that recommendations are tailored to your operation. And seasonals, funds, and technicals, that's where we're going to do our market analysis. We want to match the needs of your farm with market opportunities. That's where we get that match, which finally brings us our call to action. That's where we get the work done. And in this video, we start with a recommendation, kind of, just upfront. If you're busy, you buy into it, get it done. But now we want to backtrack and we want to kind of go through the logic through that thought process. And let's start with soybeans. Got that screen shared. Let me get a marker so we can mark this up. Let's go with yellow here. Oh, that's the highlighter. Well, I guess we'll do there we go, blue. All right, there we go. So the first thing I want to point out, I'm going to circle here. We have the first net short soybean position since April. We had some short positions in here in March and April. We had real big sold positions by the spec funds last year. We've gone from speculators want to buy beans, and really this whole time they were long beans, to finally they flip back to selling. Are they going to sell off? Are beans going to really take it in the chin? Or is this just basically them going both sides of neutral? Another way to think about it is, as we move forward, is this what's going to happen and markets are going to be pretty much neutral? Or is this what's going to happen and we're just going to absolutely get the speculators destroying this bean market? There's times it would be nice to have a crystal ball. We don't. So what we have to look for is the symptoms. So that's going to enlighten us a little bit on the next step. On this chart, let me get black, there we go. I'll push this up to the top. So this is November 25 soybeans. It's a little bit behind there. And a couple things I want to point out. Number one, this line here that I'm highlighting, that's the 200-day moving average. This is the 20-day moving average. And these would be, if you want to know my language, if we're above the 20-day, it's an uptrend. If we're below the 20-day, it's a downtrend. The 200-day and the 20-day moving average is basically just the average price of the last month, which is fairly intuitive, a roughly 20 trading sessions per month. The 200-day moving average, this is maybe a little bit more longer term direction. So let me give you a bullish narrative and let me give you a bearish narrative. Bullish narrative. If you look back to $10, I thought that would get straight. Let me see if I can do that one more time. If we look back at $10, there it goes. Markets have not been very comfortable under that $10 mark. There's a spot here. We could go back to last harvest. There would be another time where we got under that $10 mark. But under $10, we found buyers pretty easily. If that's the case, obviously we don't want markets to fall 25 cents. But if there are buyers at or under $10, it is what it is, right? That's a range that we can trade with and that we can be comfortable with. And the flip side of that is if we want to look at the upper side of this range, let's just go to 1070. That's not going to work. Let's try it this way. There we go. If we want to look at 1070, that's kind of in the upper side of this range, and we've not gotten much over that. So between 10 and 1070, the average point would be 1035. We're below average. It's looking like it's going to fall. If the fall that we get is down here to $10, honestly, this is just range-bound trade. And you know, range-bound trade is very manageable. At the lower end of the range, you move cash, grain, and you stay long futures or you write basis contracts and keep the futures open. At the upper side of the range, you do HTAs and lock in the basis later, typically, or put in hedges or whatever it is. So range-bound trade, it's a little bit boring. It's a little bit frustrating because prices aren't great, but it is very manageable. If we are, in fact, just in long-term range-bound trade, I'm not all that worried about this market, but that's a big if. And the reason I'm going to say that's an if is because we really need to see this value area in here. We really need to see us basically hold this value area. Another way to think about it is if we can keep beans above 10, or I'm not saying that if they go below 10, it's the end of the world, but it's like every time beans dip below 10, if we find buyers pretty actively, and maybe we spend a week below 10 like we did back in April, if $10 is a green light for buyers, and if that's where we're going to find support, it looks to me like this is just somewhat range-bound trade. What I'm concerned about is that this doesn't hold. And if it doesn't hold, how much harvest pressure can we get? How low can it go? That's where the bearishness takes over. So what I would say, if you follow the recommendations, I would say just, stay the course. Let's say that this market absolutely gets destroyed and we have low nines in this market, or it seems like we can't get our head back up above water. Markets turn around, and there will be a time where there's combines rolling in the U.S., where they're talking about record acreage in Brazil, where headlines will be just about as bleak as they could be for beans, if I were to guess. And that timeline is probably late August or September or maybe early October. And when everything is bleak and there's going to be plenty of beans in the world and nothing's ever going to get better, that will probably be carving out a low. Maybe last week already was the low. Maybe we stay in here. But I think beans, the best thing we do with that market as much as possible is just kind of let time pass so it kind of picks the bottom of the market. And once we know it seems like we've got most of the selling pressure out of the way, then we can start rearranging our strategies with a little bit more confidence. The one caveat to that would be basis, and let me get a marker here, green will work. Basis, and that's all we're really taking care of right now. Basis on old crop tends to have good opportunities, and that's what we're just plucking away at locking in that basis. Probably that'll be what we'll be doing for the next couple of weeks. We've already started on that, just locking in. If you have any old crop beans, making those basis moves, that's where I do see some opportunities in the soybean market, and that's why that's what we're recommending. Not sure we will get back up to those really high levels. The black line shows where we are, and this, just for reference, it's not showing up here, but this is Tippecanoe County. This is home of Purdue. It's Lafayette, Indiana. This black is where we are. Another thing that I think it's important to point out on basis is specific to your location. So these levels might not make sense, but the trends, and most importantly, decisions on basis are surprisingly similar between one region and another. So whether you're in the Dakotas, or whether you're in Ohio, or whether you're in Minnesota or Kentucky, the decisions around basis are surprisingly similar. There's a little bit of a ripple effect, so maybe you'll see basis improvement, and then it'll take 2-3 weeks for that to kind of expand. When there's adjustments to the downside, sometimes it might take a couple of weeks for that basis to kind of calibrate on the downside as well. But generally speaking, the big picture trends are not all that different. The decision rules on basis are not all that different across the Corn Belt. And that's something that, I use as an example, Purdue has a good basis tool. I'll use their location. And I know that your exact levels are different unless you're in, West Central Indiana. But the decision rules are solid. Okay, that's enough about beans. Let's shift gears to corn. And let's go with corn. Let's get a marker up here. Let's see what color. Let's do red. So a little bit better news from a speculative standpoint on the corn. They stopped selling, and this is actually the second week in a row that they've reduced their long position. So in all fairness, the speculators, they still have a big enough sold position that would justify basically buying, they're still oversold. So they are oversold. So if you want to say, hey, I think I should buy corn, funds are oversold, that is true. Now, I'm not saying buy corn just yet because seasonality still has a ways ahead of us, and they could still sell more. They could go down to the lows that they had last year. So yes, corn is oversold, but it also could sell more, which again brings us to some of those technicals similar to what we're looking on beans. And again, I will tell kind of a bullish story and a bearish story. So here's the bullish story. Bullish story is new crop corn got a key reversal. I didn't draw that very well. Got a key reversal right there. So far, that's still holding intact. And there's a gap in the market right here. That gap has not been filled. Still need to be filled. So key reversal's intact. There's a gap to fill. We got a little run up, and now it's coming down. But until it fills that gap, there's a decent shot it'll turn right around and go back up there. And if it fills that gap and it's in an uptrend, why not go test that 200-day moving average? That's the bullish bit. Here's the bearish headline on that. Markets turned around. Funds stopped selling as soon as they got into their first resistance here on the 200-day. They had one good trade, which was last Friday, and they're already failing. This thing's coming back down. First thing it has to test is this low. But if it doesn't hold at those lows, we're going below 4, and this is going to be rough. The thing about technical trade is you can always draw basically whatever narrative that you want. You can tell there's some technical sign that points towards that. I guess to some extent that's true about fundamentals as well. You can always find a good demand story somewhere, or a potentially good demand story, or a good supply story somewhere. You can always find the headline you're looking for. From a decision-making standpoint, what's the most likely thing to happen? What should we be looking for? And personally, we might get something really dramatic that takes us up or that takes us down. What I think is the most likely is that we've established this low and we have a couple of resistance points up there and over there. Yes, we have a gap right there. But I think it's likely that this corn market is going to be hovering in the low fours and just letting that clock, that calendar clip by. I think anything, if we come into the mid fours, I think there will be selling pressure. And if we get too much below 4 or even at, just low fours, that means cash prices are, depending on where you're at, but they have a 3 in front of them. Basically across the country, all of a sudden those numbers don't work. And I don't think farmers are going to be too antsy to say, oh, let me hurry up and sell at a loss. And I don't think there's going to be a ton of selling pressure. I think this corn market is going to ping pong back and forth until we can get a little bit more consolidation. Either spec funds really just give up on selling it and they start turning it around, or the calendar approaches, or maybe at harvest we have some additional selling pressure that just needs to be sold. So personally, I think last week, the last tail end of July, a little bit over a week, and then coming into August, I think this kind of boring sideways corn market is the most probable. That's what I think. Now, if we get a change in weather, which really it seems tough, we've got close to 60% silking. It seems tough to get too much of a weather scare for the upside. I just think sideways trade is the most likely scenario, and that's why really our only concern is let's just make sure we're moving. We don't want to just hold off on this and then have a lower basis level, making our lives even harder when harvest comes around. So the only thing that we're looking for is just to make sure that any cash commitments that we need to have on the books over the next couple months, that's what we're taking care of. Basically just locking in the rules of the game by knowing basis so that we can adjust, the Chicago Board of Trade pricing aspect of it a little bit later. And then that brings us to basis. Again, this year, if you look at basis levels, and this will kind of make the point that I did a little bit sooner. So this is corn, this is West Lafayette. But if we compare, the blue line is the historic average. And if you say, well, those are very different. But if you think about the decision rules, so when was it roughly the lowest for the year? Well, right around harvest, that's that yellow. Let's just mark it up. If we think about decision rules, okay, well, the price levels are different, but the historic average was still pretty close to the lowest around harvest, shortly after harvest. And then we got a nice little bump. If you look at the black line, we got a nice little bump here on the yellow, but it still wasn't the highest price of the year. And it was basically sideways through about here. And then into the spring, we get some opportunities, and into the summer, we get some opportunities. So if you think about basic decision rules, what I just now drew up is typically fairly true. You have some close to the lowest basis levels of the year, regardless of what price they are at harvest. Then you have a period of fairly stable basis where maybe you get some opportunities. But if you do get some opportunities, like for example that's one that you want to take. And if stuff gets real bad and basis seems real gloomy like that one, you just wait on it. And then if you actually want to optimize basis, you basically kind of have to you have to have old crop available into the spring and summer in your possession, because a lot of the basis bids don't carry out. And then some years it'll work better than others. If you look at the Western Corn Belt, we really didn't get this pop in the spring and summer in basis, which is abnormal, but it's very frustrating if you've stored your corn 9 months and you don't really have any better basis than you did December of last year, or it's not very different. That's very frustrating. but the basic decision rules of basis hold fairly well across regions and fairly well over time. And that's basically how they play out. Now, maybe what I just said is true 70% of the years, 80% of the years, which means in a decade, you're going to have 2-3 years where that's absolutely not the case. And that can be frustrating, especially if you're in one of those years. But all we're looking to do here is just make sure that we have a home for the corn that needs to be moved and sort out the futures price of that later. Now with that, let's go back to the summary and let's wrap up there. So let me share the screen. Okay. So the first thing is, seasonally, it is neutral for corn and it is neutral for beans. From a spec fund standpoint, the corn is a buy. They have oversold it, so it's a buy. Beans they finally are sold now, but not enough to justify anything. So that's neutral. And as of basically end of the session yesterday and today, corn is back in a downtrend and beans are back in a downtrend, and that's the bad news. Summer basis levels are historically the strongest of the year. In general terms, this is true this year as well. However, basis opportunities are not nearly as strong this year as they have been historically. Technical indicators are a mixed bag. On one hand, markets have in fact failed at their resistance levels. On the other hand, markets have been uncomfortable with trading at or below $10 on soybeans and $4 on corn. It will be interesting to see if harvest selling pressure will knock prices below these levels, or if we have established somewhat of a longer term floor in the market. Wish you had better news, wish it was a friendlier market, but it is what it is, and we'll act and react accordingly. Hope you have a great rest of your week. Let me know if you have any questions.